Yes, boys, I'm back again. It's been a little while. Haven't been making content as much recently. Been busy with lots of things, but I'm back on it for good now. Motivated as ever. And yeah, I'm just going to tell you this trade that I took today. Doing a new challenge, 50k account. So I want to see if I can use these new techniques and new models to make significant profit on them. And then I can run up these funders again. So yeah, I'll take you into the trade. So starting on the daily chart, what do we have? So the first thing that I look for is where's the market gravitating towards on the daily. So you can see here, we have all-time highs, well, obviously, a very extreme point in the market. And for me, the buy-side liquidity was obviously here, right? The all-time highs, which we expected to be taken. That was my draw for the day because we previously dropped into discount here, took out liquidity, and then reacted extremely strong. So that tells me we're going to be seeking this high. So that's very simply how I determine my bias. From here, I can drop into the 1 hourly chart. And then quite simply, I'm looking for previous imbalances which have been used as support and resistance in the past. So the first one that came to mind for me, just because that's where prices reacted recently, is there. So that was a 1 hour fair value gap, which is now a reclaimed fair value gap. And then we also have this 1 hour here, which is freshly formed, which has been used a few times and has reacted on. So we've got a couple confluences there. So I just mark out imbalances on the 1 hourly chart, quite simply. And then also, I mark the previous daily highs and lows. So that refers to where the highest peak was here on the chart. So you've got the previous daily high, and then you've got the lowest peak there, which is the previous daily low. So I mark them on the chart because I want to see, using these imbalances and the obvious bias, which side of liquidity is going to be taken. And obviously I was bullish, so I wanted to use the previous daily high as a target along with this buy side liquidity. So back into the hourly, as you can see, we had the accumulation here, which happened on Monday. And then we had the manipulation here, and then we had the distribution, which did take place yesterday. So I can drop into the 15-minute. Okay, so the next thing I do, very important, is I mark out the midnight opening price, which is there. So this is where price opened up for the new trading day. So we've got the midnight price there. And then I also monitor which sides of liquidity is the market taking in terms of the previous sessions. So we have the obvious London high, which was there, which got taken, as you can see during the pre-market. The Asian range highs and lows, which got taken during the London. So we had that consolidation here. And then the London lows, which were there, which also got taken out during the pre-market. So in terms of session liquidity, all of these sides of the market were taken out. So the market can now move to a certain direction. So because we had news at 8:30, what you want to do is you want to wait post news to see what happens. So alternatively, we could have dipped down here into a deeper discount, taking out this previous day's low, which was here, before reversing, or you can leave this untapped and look to see the previous day high, which is what we did. So market distributed straight away from news. So for me, it was about being patient now. Yes, I don't want to be framing my entry up and about this point because the market likely wants to fill this liquidity void here. So I want to wait for the market to come back into a nice position where I want to buy. And this is where I frame my reversals. So we obviously have the 1 hour fair value gap there. And we also, using this indicator here, which I'm going to bang on my chart, have NDOGs and NDOGs, the new day opening gap, which is again a gap in the market, which you can see on the chart there. So if I just mark that on there, just so I can remove my indicator. So this was the newly formed. So this is where I was framing my reversal for the day. This is short-term reversal, that is on the 1 minute for the day, which is here. Because I did see this at a point where the market would want to return if we came back into this discount region from this price swing. And then we obviously have the opening day midnight price there, which is where you want to frame your entries underneath this point or at this point. You want to wait for the market to manipulate here. So into 1 minute chart. Like I previously said, the market's taken both sides of liquidity. So we had the London highs here, which were taken. So I can delete that. And then we've also took out the previous daily high here, whilst leaving another high. So we had two equal highs, which is perfect. So a high there at 9.43 and then a high here at 8.40. So this here, for me, this is what I call the previous cycle high. So the market, something I'm testing at the minute, operates in cycles, 90-minute cycles. So you've got the New York cycles, which is between 7 and 8.30, and then 8.30 to 10. So what you want to do is you want to mark up the highs and lows between these cycles. And this is where you frame your executions. This is where you look for the manipulation to take place. And this is where you can target in the market. So we've got this buy side liquidity there, which I'm going to name the previous cycle high. So we've got the previous cycle high here. Because like I said, this is between a certain time, which is between 8.30, which I'm going to mark there, and between 10 o'clock. So this is the high between that cycle. And then alternatively, you have the low, which we had here. So this there, this is where we had the news. This was the low of the 8.30 cycle. So what you'll be looking to do is, because like I say, we've taken this liquidity there, you look to refer to the previous cycle. So if you're looking to trade this cycle, you'll be looking for any liquidity, so the liquidity lows to be taken between 7 and 8.30, which is down here. So this is the low of the cycle. So you'll be looking for that low to be taken. However, we got that straight distribution. So this low was never going to be taken during that cycle time. So you wait for the next cycle, which is here, which is post 10 o'clock to take the entry. And because I framed the NDOG as being the reversal point, you can see here where it tapped into. I was looking for this low on the previous cycle, post 10 o'clock to be taken. And this is where I look for the SMT divergence during the macro period or just before. So I looked to frame my entry during this price point here between 9.45 and 10.15. And we did in fact get that. ES ended up failing to take this swing low here, failing to manipulate below the midnight price. So this there classified to me as SMT divergence. So now I can frame my entry. So there's a couple things you can do on this. So I look to execute on the 1 minute, but I would also recommend the 3 minute. So for me, I was looking at this inversion fair value gap. This is where I was interested in the market. And for me, now it's about looking for any potential reactions from this point. Like I say, the market is extremely bullish. I want to see reactions now. And the first thing I saw here was an immediate rebalance after we broke above the inversion fair value gap here. And this is where I entered. So I ended up entering here, stop under there, and then targeting a 2 to 1. But my end target and my end goal was up here. However, I did get stopped out at a 2 to 1, which was there, because I trailed my stop aggressively, because I wanted to see price break above here, which is the first FVG of the session, which is a key liquidity point. So this is another thing that I look for. This is where the market can gravitate towards. So the first FVG of the session is a major reference point, and also any previous imbalances which haven't been filled out. So we've got, a massive gap in the market here, which hasn't been filled, which the market will want to fill. And then we obviously have the previous cycle high there and another failure swing high here, which is now equal highs at the top. So I'm looking for these areas of liquidity to target. And for me, because we reacted negatively here, this is where I got stopped out there for a 2 to 1. And it's a bit annoying because the full profit would have been taken, and you can see there it was a 5 to 1, which is crazy to be honest. But not bad nonetheless. So yeah, that was basically the trade. That was the idea behind it. And like I say, you can easily use these cycles to target and points of reversals during the macro periods. Really simplifies your strategy. Entering off an inversion fair value gap on the 3 minute or the 1 minute. So if we go on the 3 minute, you can see here, which is definitely the safer route, that we got the inversion break here, the retest there, and then we've eventually pushed up back to this point here. And you can kind of see where price stumbled along this original fair value gap, because that is where price will gain support or resistance. So definitely next time I will look to maybe be a bit more lenient on my stop loss. But then we eventually did take the highs of the day and continue to push forward, which is where we're at now.